Hi there, it's time for coffee talk. Today I'm going to have Tracy Flanagan, who is a mortgage broker at Green State Credit Union. So I'm just waiting for her to join me today. So hopefully you can all hear me. I don't have my ear pods on. So hello there. Thank you for joining me. I'm just waiting for Tracy to join. I've had some technical difficulties today. The power got shut off. They're doing some work outside. So it's been a little crazy day, but thank you so much for joining me. Oh, and there's Tracy. Let's see if I could add her and have her join in. Let's see. View request.
My, my internet
Hi
too
there.
today,
How are
though.
you?
So
Uh-oh. So we're going to have some
exactly,
fun
you
and
got
see
to
how it
improvise, I guess,
goes.
right?
We sure do.
I'm very well.
So how are
How are
you?
you? Good.
Good, thank you. You're
I
all made up.
tried.
You look beautiful.
Thank you. As do you, Stacy.
Awesome.
Mason.
Thank you so much. So, so let's talk briefly about the markets. What is going on with rates today?
So, it depends on where you land with your buying. Um, Rates started getting tracked in 1971, and here it is, 2023.
Hmm.
And the average interest rate from 1971 to 2023 is a little under 8%. And we're kind of at, I locked
Okay.
somebody a few days ago at 5.625, but I would say like 6%, low fives, excuse me, high fives or low sixes. So I don't think that that's too bad. I think it's very palatable. I see a lot more activity with buyers. At one point we were inching up in the sevens, and that seemed to be incredibly painful. But I think like the high fives, low sixes, that's not a bad rate to be at. Uh, yeah.
Okay. All right. So Tracy, you are licensed in all 50 states. So I am connected to a lot of realtors. So Tracy Flanagan with Green State Credit Union, licensed in all 50 states. So do you see people applying for mortgages more? Is there a specific part of the country, a specific state that you are writing more loans? Um, where do you see more activity right now?
You know what? I see it in lots of areas. I mean, I really see a lot of activity. I think I did like six pre-quals in the last few days. I mean, it's just, and most of them were in Chicago. Um, so,
Okay.
and I'm still seeing, as I'm sure you can say, like there's definitely multiple offers still. You still have to be a very
Hmm.
vigilant buyer. It's definitely it's better than what it
Right.
was when that was so frenzied, right? The sellers and they were getting, these crazy offers and stuff. That's calmed down, but it's still definitely a little skewed to the sellers, but more balanced, if that makes sense.
Right. Right. And is there a certain type of program or a certain type of, there's all these different programs that people are hearing about that I get asked about, first-time homebuyer programs, FHA, conventional, jumbo. What can you like briefly talk about the different types of programs? Or are there specific programs in different parts of the country that are really, I know like Massachusetts at one point had like these huge grants for
Hmm.
first-time home buyers. Is there anything specific for a first-time home buyer in Illinois that you are seeing a lot of people taking advantage of?
Yeah, so for Chicago, it is, it's the IDA program, which is it's a bond program, and it allows you to receive $7,500 toward, your down payment, your closing costs, your prepaids. It's nice. The negative is that program tends to be a little higher in interest rate. So there are times that we can kind of forego that program and kind of either get a seller credit or maybe implement a lender credit, and you can kind of achieve the same thing. That is, the IDA program has income limitations depending on, the county, and it's also capped. A really big one is it's capped. Its debt ratio is a very firm 45% back end ratio. So what that means is your total housing payment, so your principal, interest, taxes, insurance, mortgage insurance, and association dues if applicable, plus every other debt. So your car payment, your student loans, your credit cards, anything else that's on your credit report. And so oftentimes that kind of pushes you over the 45%. So we just make allowances elsewhere. Like we try to get a seller credit, or maybe I can implement a lender credit for half the, usually IDA rates tend to be a little higher, and we can kind of manage that, maybe get you a regular conventional rate, bump it up a little bit to get you some sort of credit if you need it. You can also do gifts from family members. That's nice. You can borrow against your 401k if you'd like, and that doesn't hit your debt ratio as long as it's less than half of your balance. So for example, if you have 100,000, as long as you don't borrow more than 50,000, we're not required to hit that for your monthly debt, which is really nice.
Okay, can we talk a little bit more about the debt to income ratio? Because I think a lot of
Sure.
people don't always understand that. So can we break that down just a little bit more? Because I know when I try to explain that to a buyer, I
Sure.
get confused sometimes.
Yeah.
So all right. So when we take the total payment, you're talking about the mortgage payment, which includes a lot of times the taxes, the mortgage insurance, which is if they're putting down less than
Right.
20%.
Correct.
Correct.
Most first-time home buyers
Okay.
don't have 20% to put down, and that's the value of mortgage insurance, is that allows you to get something with less than 20%. And mortgage insurance protects actually the lender. So a buyer puts down 5%. They have to have mortgage insurance, and they're essentially paying in the event to make sure that they don't default. If that loan goes into default, the mortgage insurance company will then pay the lender out. So it's like insurance for the lender. Yeah.
Okay. Okay. And then if you can also explain, so once a buyer has 20% worth of equity in their home, after a certain amount of time, that mortgage insurance can be dropped off.
Yes.
Correct?
So basically, 80% or lower, you don't need mortgage insurance. Now, if you have mortgage insurance on, say you put 5% down, and when the loan to value actually gets to 78% is when it's going to automatically fall off. Prior to regulation, you would pay mortgage insurance forever. You didn't know to be vigilant about your mortgage insurance, and it didn't automatically get removed. But you can ask your lender at 80%, hey, I'd like you to remove this mortgage insurance. It will automatically be removed at 78%. So for example, if you have a home and you get it at a great price, or the value goes up, and you've made 12 months of consecutive mortgage insurance payments, and you feel like maybe you're at 80%, you can also call your lender and say, hey, I would like to have my mortgage insurance removed. And they will do, and it's called an AVM, an automated valuation model, or they'll send an appraiser out, right. Or even a realtor inspection. They'll do like a realtor value too. And if that comes in satisfactory, then you can remove your mortgage insurance. So it's a nice way to get into a home with less than 20% down, and you don't necessarily have to wait to to the amortization part of 20%. There's other ways to do it. Maybe you're doing improvements to your home.
Okay, so so it helps for us as realtors to do those yearly like market updates to our clients to help them show how much
Absolutely.
equity they have in their
It's
property.
great to be vigilant. And then, like, my clients will call me, or sometimes I'll put them in my Outlook. I did a loan for my contractor and his wife, and they got a great deal. If they were they got a great deal, and I said, "Hey guys, go ask your lender," and I helped them out, so they were able to get their mortgage insurance removed sooner. So that's something I can help with. And you don't have to refinance. So the value of that, if rates are lower than your rate, you might want to refinance to take advantage of the better rate. But if you have a better rate than the current market value, you want to preserve that rate, and you can do that removing your mortgage insurance without touching your rate, which is what you want.
Right. No, absolutely. I totally agree with that. Awesome. Thank you so much. And then
Mm-hmm.
just one other thing about the DTI, so the debt to income ratio. I know that there was a lot of talk about like school debt, college loans and all of that. We haven't heard anything about like the loan forgiveness. So how much, a lot of uh, people nowadays have so much college debt. How is that impacting them when it comes to buying a
I mean, that's a
house?
great question, and that's a really tough one because what we're seeing, right, is people are like they're in these forbearances right now because the government is saying, hey, we're going to forgive an X amount, right? So people are keeping their loans in forbearance. Um, Now, it used to be that your loans were in forbearance, but the interest was still accruing. But I don't know if that's the case right now, given the current climate of like the forgiveness program. But I just had somebody apply. They had 56 creditors, and most of those were student loans, like they were separated out. And there's a few things you can do. You can go to, even though your loans don't require a monthly payment, you can do like it's an income simulator, like, hey, this is what I'm going to make. What will my payment be? And a lender can actually use that. So say you have $150,000 in student loans, and your payment's maybe only going to be $200. You would want to give that to me so that I could apply that $200 payment. Otherwise, there's two calculations that we use. So Fannie Mae and Freddie Mac are the secondary, that's the secondary market. Fannie Mae, if there's a zero
Uh-huh.
balance, they will require 1% of the loan amount for the payment. So if your balance is 100,000, they're going to say that you owe $1,000 a month. Now Freddie Mac is more forgivable. They do half
Wow.
a percent, so that would only be 500. But both of those amounts are typically higher than what you could get if you went on like the simulator. And actually, if anybody wants to reach out to me, I can point you in the direction of where you can get that simulator because I was just doing some research for this client because their loans were in excess, and I kid you not, of like 400,000. So it's pretty insane.
Wow.
I
That is a lot.
Yes, it's a
That is
lot.
a lot.
I know.
Holy, holy moly. Wow. Well, that is some great information for a lot
Hmm.
of first-time homebuyers and, people getting ready to graduate as they are starting to plan
Right.
for home buying. Wow.
It's a
I
lot,
had
yeah.
no idea.
And the other hard part, which I
It
kind of
is.
don't understand this, is like they make you, like for my student loans, I mean, I don't want to give away my age, but like my parents didn't have to co-sign. Now all the parents have to co-sign, but I kind of don't understand that because you have to pay in your student loans. You can't put them in a bankruptcy ever. So why do they like kind of saddle the parents? It doesn't make a lot of sense. But the parents, they have to, like if this is your child's loan, I still have to hit you for that debt. Unless your children are paying, they've made 12 consecutive payments on their own from their own bank account, then we can waive that payment. That's a lot.
Wow. That,
I,
that is crazy. Wow. Uh, Wow. Well, thank you. We could talk about this forever, and I don't want to keep you forever.
sure.
I do want to ask you though, You you rescue dogs and you have foster dogs. I want to ask you about that because I think that is amazing because you don't always have the easiest dogs and you give them so much love and support. So I want to talk to you about
Oh, you're so sweet.
your
I could
doggies.
talk forever on this subject, but yes, I do. I like to rescue dogs. There's so many people out there. My Aunt Cheryl in Georgia, she has like a horse rescue, and my love of like rescuing really comes from her. And she has like llamas. I mean, she's nuts. And chickens, and she has turkeys. It's hilarious. So dogs are in her wheelhouse, but
Oh
they're
my,
one of many animals. Yeah, it's great.
so tell me, so how many
I
dogs
just
do
have
you currently
two,
have
and
right
the most
now?
I've ever had is three. So what happens is you foster. So I'll foster a dog, and so you take a dog in, and then you just are like, I'm in love. I'm going to keep this dog. So that's what happens. That's how I have three. So I mean, I only have two now. One passed away, but I just keep these foster fails. So
And tell me, but the one of the dogs that you have has all kinds of
yeah,
medical
they do.
issues, right? And you're like, oh, and so you like I can't even imagine. I mean, my Wrigley, she
And that's
has like
that.
9 lives,
Oh, really?
I'm
So it's a
convinced.
dog with 9 lives, like a cat?
Yes. She like she's eaten grapes
Oh,
and
that's.
she's hasn't had any problems. She's gotten attacked by a dog, hasn't had like needed
Oh,
two
wow. Okay.
surgeries, hasn't like she's fine. She's has more
Mhm.
allergies and more issues and like it doesn't matter. Like
Oh, that's
she's
awesome.
15
Yeah,
and she's
that's
gonna
a
live
that's a great
forever.
age. How long have you had her?
Right? I've had her since she was
Whoa! So
eight
you've had her 15
months.
years. Oh, that's awesome.
Yeah. Yeah. So tell me about your dogs
Mhm.
right now. You have two of them. You drive across country how many times?
I
Like a
do.
million
I do.
times
I
a
take
year.
them whenever I can. I would never like put them in a plane because they have to fly like cargo, and I have Shar-Peis that are like wrinkly, and they have a lot of. They just always have a ton of issues. They're the ones I have, which is fine. But one has like Marley. He's such a monster, but they think he's like 15. But he has a torn ACL and a partial ACL tear. So I took him like it was 2 to 3 times a week for like 6 weeks, and he had physical therapy. He had acupuncture. He did like water treatment and laser. It's crazy. You gotta but he's like he wants to go on walks and things like that. So he's it definitely worked. It was well, it's Homer, it's out in Orland Park. It's Homer Glenn. It's a veterinarian, but they're amazing and they just did such a great job. So uh yeah. Yeah.
Oh my, that's awesome. That's so awesome. Oh my gosh. And they do okay in the
Uh
car?
Well, yeah, Marley is he's a barfer, so like it's just I watch out of my rearview mirror and I look and he just sometimes he projectile and he throws up. So I had to pull over one time and I go to the gas station and I'm getting like paper towels and he jumps in the front and he just starts like barfing in the front and I'm like, "Oh, dog." And it was like 50 miles into an 800-mile ride. And I'm like, I can't deal with this. So you know what I do is I make him intermittent fast. Like I give him like the day before. I don't really feed him, and then I only feed him like once a day, and it's like 3 days. But he's better now. But he throws up. I'm the one doing all the work. I don't know why they're
Oh my
upset.
God.
So yeah,
Right? No kidding. Oh my
thanks.
God.
Yeah,
That is
yeah.
awesome.
He's
I love
I
that.
love rescuing
I
animals. I
love
think
that.
they're so great. They have so much gratitude. I mean, I just love animals, period. But I think like rescue dogs, I just feel like they kind of know that they're given this and they're so loving. They're just amazing. I mean, a lot of my family members rescue
Right.
dogs and animals because they all have big hearts. So yeah.
Yeah. That's
Yeah.
awesome. I love
Thank
that.
you. Take
I
my
love her.
dog to my dad
Yeah.
was in a nursing home, and I would take my dog, and all of the residents just loved her. Because she's just a gentle soul. But like animals are so good for people. They really they say like that people are willing to show love to an animal almost before a person. Like you're kind of, especially men, maybe they're older and they're stoic, but they'll show love to an animal. So it's very, very sweet.
Oh yeah. Oh yeah. I mean, Wrigley did so
See,
great with my dad. Like she would go and lay with him when he was sick, and like my
right?
dad was so much
Yeah. He
happier when she
probably
was
adored
around.
her and really
Mm,
appreciated
yeah.
it, right? Yeah.
Yeah.
Very cool.
Oh yeah. 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 When he was in a nursing home, like for rehab and stuff, we tried taking her, and
Uh-huh.
she couldn't handle being there. She was too anxious. But when we would bring her to visit him, she would
Oh,
just
very
lay
cool.
with
Yeah.
him.
It's like they know. They're gentle. Yeah. I love animals.
Oh, you know. Yeah. Oh my gosh. Well, Tracy, this was so great. I think that you shared some really great information. I could probably have gotten, like, I could have talked to you and asked you a million more questions because I think the mortgage process is it's so complicated, especially when people um, like
Yeah.
they're first starting out. And I think that if people just go online and apply and don't
Right.
actually talk to someone, when I when they come to me, I um, they really don't know,
Mhm.
or they think they're approved for something just because they put numbers on in the computer, and so they
Mhm.
get spit out to them, but they really
Right.
don't understand the whole DTI, or they don't think
Right.
about the HOA fee,
Mhm.
or they don't think about the taxes, which totally
Mhm.
changes the formula. And so I think that it's really important to speak to someone. One last
Sure.
question I want to ask you. Like there's I don't want to say, you know, there's the you work for a credit
Mhm.
union, which is obviously different than a bank, and it's also different than like
Right.
a mortgage broker. So what's the difference between you and a mortgage broker?
So that's a great question. We just got acquired, so I'm with Green State Mortgage, which is a subsidiary of Green State Credit Union, and the value of that is we are a not-for-profit, so we don't pay federal and state taxes, so our rates they're just better. Um, and so that's been really amazing. So usually when I'm up competitively, I have an amazing rate. We also do other stuff like we can do bridge loans, which a lot of the lenders don't do anymore. So I have that capacity. We also have great, like I can do like an income analysis. I also have an accounting background. I graduated from DePaul, and my major was accountancy. So I can with self-employed taxes. I'm great at them. I can kind of extract income where others maybe don't know. So that's very beneficial for me. But the credit union itself, it's just really good rates. I have equity lines up to 90% of the value of your home. I have a special program that we do where I can break a first mortgage up and a second mortgage, and I can get the payment lower by doing that versus like maybe just one loan and having mortgage insurance. Mortgage insurance is good, but there's some factors like it's risk based pricing. So if your credit score is a little lower, your mortgage insurance is going to go up. That's also the value of like FHA. They're more forgiving with a little lower credit score. VA's amazing program, VA. It's no money down. That's a great program. Those rates tend to be really low. Uh, a lot of veterans don't know
Right.
either. Like I'll ask and they don't tell me that they're a veteran and they don't realize that they have these amazing benefits. So
Got it. Got it. So there's definitely a lot of perks to talking to you. and comparing
Yeah,
the
yeah, there's so
differences.
many options out there. And also lending is very malleable. Guidelines change a lot. So when people are like, oh, I didn't have to do this, 5 years ago, you may not have had to, but you do now. And so it
Right.
changes a lot. It's very liquid. Yeah.
Okay. Well, that is great information to know, and I really do appreciate it. I kept you longer than I thought I would, but as I said, we could talk about
Thank
this
you,
for
Stacy.
hours.
No, it's great. And I've worked with you on deals and people love you. You're so easy to work with and you're
Oh,
very
thank you.
knowledgeable. And you work extremely hard for your clients. So thank you.
As do you. I know that you
Yep.
and I have we don't always have the easiest
No,
ones that
but
we
that's
work
okay.
with,
Yeah.
right? Sometimes. But you definitely do work hard to make sure that people get approved, and you try to make sure that
Yeah.
anyone can
And
buy
you
a
know what,
home.
even if you can't buy right now, I can try to help you. We have our one client that he'll buy within the year. He just has to wait a few months, fix up a few things, and
Yep.
he's golden. So
Right. Well, just the fact that you also work with people on repairing
yeah.
their credit, which is also great. So you do offer a lot of different things to help people be able
I
to afford to
try,
buy a
for sure.
house.
I think I work hard. Thank you.
You absolutely do. So thank you so much, Tracy. I will make sure that people have your contact information if they are looking to buy or need any assistance in refinancing, bridge loans. I know that that's something that people are
Yeah,
sometimes looking for, especially if they're
for
buying and
sure.
selling at the same time, especially if there is more
Absolutely.
multiple offers.
Yeah.
That's a great thing to have. So, well, have a great day, and I
Thanks,
will
Stacy.
talk to you soon. And everyone, thank you so much for
Thank you so
joining us
much.
today.
Have a great day. Stay safe.
Have a good one.
Bye.
Bye.